following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technician's Hour. This is Wednesday the 29th, and we're looking at, can't take that. We're looking at the Dow up 142 at 34,441 after declining really sharply yesterday, over 500 points, trying to rally and then close towards the low of the day. This is going to be very interesting because we had a little trial balloon there. Senator Chuck Schumer stated that the Senate could take action as early as Wednesday to fund government, prevent shutdown. We'll see what happens there. I'm not sure about all the technicalities because so far they've been up against a lot of resistance. So we're looking at some kind of a bounce here. The H pattern, let me just show you this for people that are new to my work. This is kind of one of the patterns that I look at all the time. I like to think of the market as either going straight up, straight down, or rallying and then failing, or failing and then rallying. In other words, straight line up, straight line down, cup formation, or an arch formation. Sometimes you can get the straight line down and then you make the arch formation like it looks like a lowercase h, and that h fails at the first or second peak, peak A or peak B. I alphabetize them sequentially all the way to G, but at that second highest, first or second highest peak, it fails, and then it takes out the left side low. You can see exactly what happened here in the Dow on the daily chart, 35,631, August 16th, all-time high, drops sharply to 34,690,000 points, and then it rallies actually quite sharply, and it starts what I call a Chapman wave inside track repellent zone line, a little channel. And then what happens is it comes down and it takes out that 34,690 level. That's usually a sign that says be careful because you can make a one-to-one to the downside. It's done more than that. It went to 33,613 around about the 19th of September. Had a really strong rally. And where did it stop? It stopped right there at that lower trend line of the little mini channel that I call the inside track repellent zone. And it did get repelled from the 35,000, I think that was in 61, 35,061 from that high that was made around about the 25th, and it comes down sharply to yesterday's low. And now what we're doing is we're sitting right here. If by Friday afternoon the weekly chart is trading below 34,200, that just suggests that the weekly chart has gone from a sell signal to a sell mode. At this point, I've been reluctant to even call it a sell signal, but if it drops again, if it can get below 34,200, this is kind of serious stuff, because you've got this wick of the candle that says, wow, could be a quick test of the 33,613 low that was made. Now, what you need to see on the upside to really change everything is to break about 1,000 points higher. 35,250 to 35,420 by the first week or second week of October says, all right, we're done with that whole consolidation. We're still maybe in a consolidation phase, but we're more moving towards the upside. I just want to get that out the way and just say very, very quickly, we've got levels to watch, and that's really what we do. We've been negative on the market for some time, and considering that the big tech index 100 stocks are really the ones that are under pressure and should continue under pressure. All right, let's just move this one away. All right. And now what we're looking at is within the context of the various, and what's also interesting is tops are made in rotational fashion. Bottoms are made in unison within a couple of days of one another. All the indices make lows. So we saw that August the 16th was the high, all-time high in the Dow. Well, wait a minute. A month later, just less than a month later, September the 2nd, at 45, 45, 85, the S&P makes two little doji tops, makes a Chapman wave 2-bar reversal, and then turns down sharply and goes all the way to 43.05, has a spectacular rally, a very quick rally, filling in the gap of that Monday morning a week ago, slump to the downside. And what happens is you have 3-4 days of market action that goes upside. S&P lags a little bit in the stalls of the Chapman Wave inside track daily repellent zone, pulls back sharply. It's up 25 points now at 43.77, and in the lower part of the halfway marker of yesterday's very ugly candle. And the manganese weak, stochastics weak at 49%, on balance volumes very weak, and the 9-period crossed negative way back around about the 13th of September and hasn't crossed positive yet. And the weekly chart has got a leg D going to a peak D, and for 4 weeks we haven't come close to 45, 45, 85. We've got 1 day to go, 1.5 days to go, today and tomorrow, to get to 45, 46, to change the weekly chart. I don't see that happening. And that says that the monthly chart has got a big red candle. You've got all of October to break about 45, 45, 85. If it cannot do that, finally we've got that leg B going to a peak B in the monthly chart. And the Chapman Wave methodology, a buy signal to a buy mode implies they almost always, there's at least 4 higher peaks going to fulfill the buy mode minimum of 4 peaks. You can go higher to E, F, and G, but D is where other things can happen. And we're only in leg B now. That means you can't make a peak D until sometime in 2022, and that couldn't be before February or March. So this is still very bullish, even though we could have a pretty decent consolidation. Let's call it a consolidation for now, because the monthly chart hasn't even turned down yet, technically, even though intra-month it's weak. All right, let's go to the QQQ. 1, 2, 3. Here we go. QQQ, same story in the weekly chart. Peak E, probably a sell signal. I have to wait for Friday to be able to call it, because I need a price underneath 365.45, the 9-period exponential moving average, to at least get a sell signal. And we've got a leg G/C in the monthly chart. Technicals there are very good. We are seeing the pullback in the on-balance volume finally. That's all you need. You have some kind of a pullback because it was very overbought. The weekly chart, everything's turned down, but you haven't got the 9-period even close to crossing under the 14-period moving average. We made a top on the 7th. See how you're rotating through the tops in the different indices? So the top is at 382.78 on the 7th of September. We went short about 2-3 days later, and just about a point and a half off the all-time high. And we remain short in that small position, but it's in a 3 times short. And that so far says that the rally to a leg E, look, this is already gone in a full arch formation of the dreaded H pattern that we were talking about just a moment ago. Under it, now it's over at 360.93. That's the level that we made a low on 19th, I think it was the 19th, the 20th of September. Very sharp rally, couldn't get even to the Chapman Wave inside track repellent zone, makes an arch, pulls back, and now that says this is weakness that we've got to respect. Let me just do this real quickly. No, let me finish the IWM, and then we'll start looking at the various stocks. IWM is only at 27 cents at 221.60. It's in this middle of the range. In the weekly chart, it's up and down, bouncing within gain confirmation. I'll be back in a moment. Dow's up 126, S&P's up 23. Back, Basil Chapman.
Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the markets open to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today, and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN, educating investors.
What's separating you from the most successful men and women on Wall Street? That's right, information. Having all the information gives us the perspective we need to place the right trades at the right time. The TAS Profile Scanner is the premier market profile-based scanner. Powered by its acclaimed TAS proprietary algorithms, this feature-rich scanner instantly filters over 2,500 plus global financial markets, such as stocks, ETFs, commodities, futures, and Forex. This powerful suite of tools leverages instant trade filtering and strategy formulation to show you emerging trades before they happen. For a limited time, you can save $100 off your first month by using the promo code UPGRADE, and you still get a 30-day money-back guarantee, so you have nothing to risk. Level the playing field with the TAS Profile Scanner, which you can find under the Services tab at TFNN.com. Sign up today.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hi everyone, we're back. Basil Chapman, Dow's up 165, S&P is up 24, up 25. So just let me show you this here. So the 10-minute chart of the S&P E-mini made in the 10-minute chart, you've got a peak E at about 43.78, 75. And remember, I like to draw the rectangle. It's just a real easy thing to do. It says you can last a lot longer in that trading band than you ever imagined if you don't have a lot of patience. And lo and behold, eventually it slips under. It goes under the 43.65 support, slips all the way down to the 43.47 level. Then comes out Schumer's statement. And boom, it rallies, and then it stalls because these are just trial balloons. Nobody knows anything. And just real quickly here on the 1-minute chart, you can see Chapman Automated 437, 457 is the resistance right there. And you have 3 supports at 4365, 4363, and 4360. That's really important. So let's go to our first caller. We have Tony in Wellesley. Tony, how are you?
I'm good, Basil. You?
I'm very good. Thank you. And I like to see the sun finally came out after that rain yesterday.
Oh, I just got my walk in. It's just
oh,
lovely
that's great.
out there.
Wonderful. You know, I was shocked when we were walking. Huh? Can I just hold you up for 1 second to say, walking in Wellesley about 3 weeks ago, I could not believe the number of empty stores. I just couldn't believe it.
Sure. It's tough parking, you know.
But also, I mean, the fact that some of these stores that have been there for years, some of them decades, boom, gone. Well, anyway.
It's a shift in the retail business. It must be. Everybody's online, you know.
Absolutely, yeah. All right, I'm not going to interrupt you. You wanted to look at?
Nugget, NUGT. I think gold's kind of oversold here.
So let me just do a couple of things here. My emotional part is saying, wow, gold, with this kind of conflagration going on in the markets, surely gold should be showing some leadership. So that's the emotional part of me. The other part of me says, well, wait a minute. You've got Bitcoin, which kind of took over as a tradable, because that's really what happened for years and years and years, decades actually. A lot of people just trade gold. They trade just intraday, shorter term. Then you have your longer term positions. But a lot of people intraday would trade some part of the GDX or gold itself or some of the gold stocks. That's not happening, and I think one of the reasons is that the dollar. Look at this dollar; it's up 32 ticks at 94.05. It's been showing really good strength. The monthly chart, finally, the MACD crossed positive. I've got a feeling that the relationship, and I've spoken about this on my show forever, that there are periods over the year where maybe 2 or 3 times over the year for maybe 2 weeks to even 3 or even sometimes 4 weeks, you'll get a trend parallel where the dollar and gold go in the same direction, not the same amplitude or anything, but just kind of in the same direction. Most of the time, they're going in opposite directions. So even more important than that is that when I look at certain of the gold stocks that I use just kind of as a benchmark, we're not trading them in my opening call, we might not have them, but I talked about them a lot, is ASA, which is really, I think it's 5 South African gold stocks, and I think they're in Bermuda. This is just a holding company. And ASA, which is ASA Precious Metals, Gold and Precious Metals Limited. Yeah. So what happens is, as a benchmark, I find that this kind of gives me a nice feel for the major trend of gold. I can't use it solely, but it's like a little barometer for me. And coming originally from South Africa, actually having as a teenager for my high school years, living in a mining town just near Johannesburg off the Vaal Reefs, where there were a lot of gold mines. In fact, my late grandfather had a stone crusher. You know, in the mines, they pull out all the stones and everything, and then somebody has to crush them into little pieces, and they're used for other things. So for a period of his life, he had that. So this is something I watch closely, and it just is giving me, right now, it's giving me a sign saying, hey, it's getting close to some kind of a bounce, but it'll have to be a really serious turnaround in gold to see that. Now let me go to something like a Newmont Mining, another really well-known and a very well-run company. Newmont Mining is trading at 54, it's down 58 cents. After yesterday's big green candle, it's really struggling. Now, there's a chance that there's going to be a doji candle in the weekly chart. So that says if Newmont Mining, also kind of a benchmark, is able at 54 right now, is able to trade any day with a close. This is a close. It can't just hit it. It's got a close above the candle of the 22nd of September, which had a high of 55.64. Well, 1.5, 2 points it should be easy for a gold stock if gold is actually turning around. I want to see something like that. So you are looking at Nugget. I'm just going to, if you don't mind for the moment, because Nugget obviously has the same kind of pattern. It's trading at 41.47, and that is the direction daily gold miners. I'm not sure you can call it an ETF. I think it's a fund. And so this is, do you have a position at all at the moment?
I got a small position. I just bought it today at 42. Okay,
so you see, the speed with it suddenly pulls back. Like you bought it at 42. The high was 42.53. So you bought it very soon after that, and yet here it is at 41.51. I don't want to see. I want to see the exact opposite. I want to see it open at some kind of preferably a gap down low, and then I want it to close at the high, followed by a second day, not a gap up day, just a steady build with a strong close in gold and a strong close in the GDX, because I want the gold miners to. I know that you haven't asked a question about the gold miners, but if you follow the gold miners, you'll see that the GDX a lot of the time leads gold. If it's,
sure.
I like when the GDX is leading and gold follows, rather than when gold suddenly spikes and the GDX says, "Oh, what? Oh, sorry, I was sipping my tea. I didn't even see that. Excuse me, I'm not moving." So I want to see GDX become a leader. And at this point, we've got the one-to-one to the downside. This is what I call the Chapman wave, one-to-one parallel extension. We aren't quite there, and this says, if I'm going to be very strict about it, it usually has the same degree of angle as the last decline or rally. And in this case, 2879 is the GD axis. That would be one. So it's within a point. It's almost there. It's less than a point, actually. So this is very important. But I don't see, with the dollar rallying like this, I thought the dollar would maybe pull back a little bit today. The day's young. Anything can happen. It's off the high of 94.09, 7 cents off, 7 ticks off the low. Hey, hold it a second, because I wanted to do this together with silver. Can you hold?
Sure.
Okay. We're on with Tony in Wellesley, Massachusetts, a neighbor of mine. We'll be back in a moment. The Dow's at 200 and the S&P's at 30. A lot of rumors out there, and we're going to be following them all day. I'll be back in a moment with Tony.
Are you having fun trading the markets but having trouble finding like-minded individuals to discuss your trading and investment ideas with? Become an apex predator in the trading markets and join the Tiger's Den Trading Room only at TFNN.com. The Tiger's Den is an exclusive trading room where successful traders from around the world come to exchange trades and ideas. Join the den and surround yourself with the sharpest minds in the trading world. Subscribers to the Tiger's Den are also the first to have their questions answered live on air and can privately chat with our TFNN hosts live during their shows. Interact with other Tigers and Tigresses as they share trading ideas, news analysis, and discuss the market action all trading day. Subscribe to the Tiger's Den risk-free with our 30-day money-back guarantee and become part of the TFNN trading community. TFNN, educating investors.
You could be making money off the stock market. And if you're already making money off the stock market, you could be making a lot more. Check out TFNN and Tiger TV and get expert investing advice to give you the power to control your financial future. Go to TFNN.com and find the newsletter for you. Whether you're into trading gold, metals, futures, currencies, or options, you'll get advice and analysis to help you seriously get ahead. TFNN also features trading services with a 30-day money-back guarantee for new subscribers, as well as TFNN's Tiger Den Trading Room, trading software, and educational webinars for all trading levels. And make sure you check out Tiger TV for free on TFNN.com or TFNN's YouTube channel for live financial content from 8:30 a.m. to 4 p.m. Eastern on market days. Stop watching on the sidelines while other people get rich and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Hi folks, we're back. Basil Chapman here. This is the Tiger Technicians Hour. And the Dow is up 167, S&P's up 24, just had a sudden pullback again. So, just look at this real quickly, look at the trading range. Remember, I like to say rectangle formation can last a lot longer than your patience. Look at this, even in the 1 minute chart, you've got this. So let's go back here, we're with Tony. So Tony, I don't know if you looked at silver today, but the silver is down $1, over $1 at 21.45. I don't see how gold can go by itself to the upside without silver, and I don't see how the dollar can have an extended rally without the dollar really pulling back. It's in leg E in the daily chart, and I'm looking at this, and I see the MACD's rallying. The stochastic's at 88% in the dollar. It's well above the 9-period moving average. The 9 is well above the 14. I just don't see a reason other than a pullback to digest, take a breather for gold, and that could help in the dollar, but that could help the gold contract and maybe even silver bounce a little bit. I'm just saying I see more risk than I see profit or benefit just at the moment. And I'd much rather be buying strength than weakness. That's really my issue here. So I don't know if that helps.
I agree with you, Basil. But I think I'm looking for this because the dollar's up against Bollinger Band, and Nuggets up and below to the bottom of the Bollinger Band. I'm playing this from 42 to 43. Just a 1-point trade.
Okay. So then, you know what I'm going to recommend? It does mean to sacrifice a little bit. I would much prefer. So let me go back. You're looking at Nuggets. I'm going to go to Nugget itself. I'm just going to suggest to you, I personally would have a stop in. I don't know what your stop is, but I would have a stop, and what I would look for is a close in the next day or two above yesterday's high in the Nugget, which is 42.78. And, okay, this is the way I would play it. Just on a real intricate, very short-term basis. If you see it at 41.23, whatever the news is, it's going to be news-based. There's no question about it, because these rallies, I said in the den, it's a balloon, a trial balloon for Schumer. I don't think he has any proof of what he's saying. It's just, these guys, politicians, the mouth is a separate universe. It's the mouth just goes.
That's right.
So it's just something completely different. In fact, if you had asked them 10 minutes later, what did they say? They probably couldn't repeat it because it goes in automatic. It's like an automaton. It doesn't matter who it is. It's a politician. So I'm just going to say to you, I would prefer that let's just say 41.24. Let's just say 41.18. Within a minute, this could change. But let's just say 41.18 holds. And all of a sudden, Nugget is starting to rally. If gold starts to move, obviously it'll move with gold, but if gold is starting to move up, I want to see gold trading. I don't know if you're following the contract at all. It's down 10. I'd like to see it minus 7, then minus 4, and then minus 2, all within the space of 30 to 45 minutes. At that particular point, I'd say, great, now you might have a trend change. You can play it. I would prefer to have some kind of a stop in place for your Nugget, because we are talking about a vehicle that moves very quickly. I'm just going to say to you, 41.18 says to me, all right, just have your foot there ready to take profit. I'd rather be buying upside than downside. A falling knife, and you never know where it's going to stop. On the upside, at least you can keep putting in stops and raise the stop. But to be absolutely honest with you, I see nothing yet. And even if it does break above 42.78, this is Nugget, I need to fill the gap. I need to see it actually get into the low of 43.15, which was the low of 3 days ago, and before it even broke down further. So I'm looking for higher highs and higher lows. I don't want lower highs and lower lows.
Let me leave you with this one last thought, Basil, when we do get a bull market in gold.
When we finally get
since the 1980s.
You're
in a bull market when gold stocks go up 3 times more than gold on the same day, percentage-wise, then you're in a strong bull market.
Very strong, and of course the one to always speak to about that is Tom O'Brien, and he's seen it all, and he knows that there are days where you come tumbling down, and there are days where your eyes just pop right out. You say, how on earth did this stock that was trading at 2.56 suddenly move to $6? I mean, that's the way gold moves. But I'm just saying to you, I'd rather be buying strength than weakness. That's really the simple thing.
Okay, I'll go put my stop in, Basil. Thank you.
Thank you very much for calling. We'll speak to you soon. So, folks, I just wanted to go through this. So the silver, look at the silver contract. And you remember we were talking the other day, we had a caller that we were looking at the SLV. I said, you just got to be careful because you've got the potential for a gap down, and it was holding so well, SLV, which is the silver trust series, and that low that was made on the 24th of 20.48. Look at this today. You're trading at 19.88. It doesn't sound like much, folks. That's 4.33% just from yesterday's close. And that's the thing. And now this has gone more than 1-to-1 to the downside. I'm not sure right now that we're looking. By Monday, gold and silver could be right in play because of whatever happens with what we're looking at. A lot of stuff going on this particular week going into Friday. So I'm just saying to you, anything can happen. I'd rather be buying strength than weakness. That's all. Okay, let's just go to high-grade copper, another little clue to the general market. Pulling back, it's still in the low range, but it's holding quite nicely at 4.217, just down a fraction. Let's look at wood. We always do this together. iShares, timber and forestry has almost the same pattern, pulling back a little bit. Now, I just want to go through this. We own DBA, which for quite a while now, the DBA is the agriculture. It is called the DB Agriculture Fund. We're in from 13.77 over a year ago, July of last year. It's had really a nice percentage up to 19.48, peak D in the daily. It made a peak E in the weekly, pulled back, and then went to a peak D, a quicker one. These double tops are amazing how many times they're happening. I'm going to talk about that in a moment. And then it pulled back, but it's still in the upper range. And that says, watch wheat. Look, that's wheat. The wheat is trading. It's trying to rally. It's a 712. It's up 5 3/4. It needs to get to 736, and it needs to do that towards the end of next week. Soybeans stuck in a range, trading at 12.79. It's up a little bit today. I want to see that at 13.03, and quite soon. I want to see corn, as I say here in Boston area, has a better chart than the others, trading at 535, up 2 3/4 today. Needs to get to the 547 area, and that's going to say, great. Now you can start moving high. And this particular agricultural fund also has sugar, and sugar's trading in an arch formation, isn't acting all that well. But I want to see these things move. But if they move, we're talking inflation again. So far they haven't. Talking about inflation, look at crude oil. I said I expected some kind of a pullback yesterday into today. We've got that. But it's only down 5 pennies at 75.25. A lot to talk about. Oh, I've got these questions. I'm going to do that as soon as we Basil Chapman Tech Emissions Hour. I'll be right back.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Of course, we're back, and there are a number of people who email me about their notation in the Chapman wave. I just want to show this. So I said that the 1 minute chart made a lower low, so we had to start a new count around about 9:45 this morning, Eastern time. So it went to peak A, peak B, peak C, and then it pulled back. And then I said rectangle formation using the 200-period moving average as support. It can last a lot longer than your patience. So for those of you who use Chapman wave, look at this. It didn't go to D by going above the high that was made at 40 right there, at 43.7550 at 1 minute past 10. It pulled back to about the 43.64s, and then it ran twice back, and it still didn't break. So this is peak C1. Because all the action suggested that this could have just made that quick 25-cent break to D, but it didn't, and the technical started to fail. That becomes peak C1, C2, and then a little cup formation, double top, peak C3, and then it pulled back. And then what I do, I can use color because I use trade stations. So trade station says you can change that to the plus sign to a red. And that says be careful because that acts like a D, and lo and behold, we went under the 200-period moving average. Then in a rectangle formation, remember, it's like a magnet, so it draws price back in. And there now the price is back inside at 4367. But actually what we're looking at is the rectangle formation can last a lot longer than your patience, and it keeps going. So I just wanted to do that for those who use Chapman wave methodology, how I use the peak C1, C2, C3. A lot of people say, hey, can you show examples? I do. Now I want to show you something else. Here's the TLT, 151.79 on the 22nd of September, which happens to be less than a point away from the all-time, the recovery high back in July of 152.72. In the Chapman wave methodology, peak D is where other things can happen. That's where you got to be real careful because that's where you could recycle higher, or you can have your sharpest pullback. Big pullback takes time, rectangle formation, finally comes back and makes another peak, A, B, C, D, to 151.79 on the 22nd of September. How many times, I discussed this briefly with Tom yesterday when I was interviewed, have we seen prices come back, and they come back within almost like within a tick or a point of previous highs from months ago? I don't know how the market even remembers that. Well, it did that, and then it broke the arch formation, the TLT, went to a lower low at 143.64. This is really important because the first time that we're looking at yields, T and X.X right here, yields breaking previous resistance levels. Look, here we are. That's the one I drew in the monthly chart. So it says because yields are moving up, you've got a big move in the XLF, in the financials, because they don't rely on it, but it's a big part of looking at the financials, not so much the brokerage part, but just the business that they do. If yields are higher, it just seems to benefit them. Actually, it doesn't benefit them that much, but that's the way it works. And they've had a really good bounce. And what happened? You make a high back in August the 13th in the XLF, the S&P Select Financial Spider Fund. Where? at 38.95. Pull back sharply to the just above 37. Rally again to where? To 39.04, a fraction above peak D. Finally, you get the peak D, a whopper of a pullback down to the 36 level. And where do you rally? To yesterday's high of what? 38.92. So you're making these triple tops, and it says, okay, you want to see the XLF really break to the upside towards the 39.50s, you'll have to see the TLT break down. Well, the TLT is at a kind of a support level in the 144, 143 area. If it breaks under 142.20, let's call it 142, wow, those yields are going to take off, and that's going to scare the market, I think. Okay, got that out the way. I also talking about peak D. Look at that peak D in March of last year at 179.70. Look at that move down to the 130s. I mean, this is yields. This almost looks like a stock, right? And what do I see? My eye says you've got a Chapman wave inside track repellent line right there, and it's going to be tested on time alone. Remember, trend lines, don't get carried away with trend lines. Time can see you move out of a trend line. But in this particular case, if there is a push above this downtrend line in the monthly chart into the 154 area for the TLT, that's going to say, phew, yields can start to pull back again, and now we're going to be looking at something that is ameliorated because the factor of higher yields and inflation, all the things that it carries with it, can be just set aside for the moment. All right, enough with that. Just crude oil. I want to go back to say crude oil trading strongly now after coming all the way back to the 73, 74 level. After the 70, it actually hit 7. Look at this. Yesterday, doji candle high, it gets to 75.69, the continuous contract. Pulls back for 1 day, and it can't take the strain. It's now above yesterday's open and close. That's kind of positive. If crude oil starts to trade in the 77.80, 78.20 level, that's going to be really important for the weekly chart because it's going further and further away from the down channel that was resistance and now is support. So we're watching this very closely. Have I done everything? Yes. Now, so have a look at this. Shop. This is Shopify Inc. online store for individuals to use as a platform. I've got this as a peak E at 1650.00 on the week of the 15th of July. And it's trading now at 1365. Hey, wait a minute. This is a stock that's in the 1600s, and for 2 days in a row, it makes an exact round number all-time high of 1650.00. Those of you who know me here, you know I love round numbers. I used to follow round numbers back in the 1980s, but in 1987, on the crash, October the 19th day, when those stocks came down, General Motors, DuPont, all of them, they opened at round numbers. They had round number lows, some of them 20, 30% lower, and then they closed at round numbers. To me, there was an absolute clue that there was a major low and that we should see new all-time highs within 18 months. That's what I said to Fidelity, was my first big client at that point, and that's what I said. So I've been following round numbers for years. Isn't that interesting? All-time high, couldn't break it the next day, big red candle on the 26th of July, and that's going to be a benchmark we're going to have to watch in 2021. As soon as it takes out 1650, you're looking at a new bull market in Shopify. So that's it. And wait a minute. Isn't there a stock that we follow very closely here? And I don't necessarily have to have it. 799.00 was a round number all-time high on the 27th of September for what stock? Could somebody tell me? Raise your hand if you can see which stock it is. Tesla. So it pulls back for a day, and now it's trading at 792.58, green candle, up 15 points. And what we have seen is that Tesla is one of the few stocks that I follow closely that makes round numbers and then treats them as a target to break above. I don't know if that was a round number right there. No, it isn't. Yeah, round number. Isn't that interesting? So you've got to understand the characteristic of whatever instrument you're looking at. S&P right now has that broken to the upside. Yes, we finally got that leg deep.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Markets can rise and fall like the tides. Subscribe to Basil Chapman's newsletter, The Opening Call, and you too can ride the wave. Basil Chapman is an authority in technical analysis. His Chapman Wave trading system has been helping traders identify trends and capitalize on momentum in the markets since 1984. TFNN invites you to test Basil's proprietary Chapman Wave trading methodology with a monthly subscription to the Opening Call newsletter for only $149. Your subscription to the Opening Call comes with a 30-day money-back guarantee, as well as daily market updates on key indexes, stocks, and commodities. Ride the wave. Sign up for the Opening Call risk-free today.
Are you looking for a secured investment which pays you on a monthly basis? The Tiger First Mortgage Program may be the program for you. The best rate on a 5-year CD in the country right now, according to Bankrate.com, is paying 1% per year or $1,000 per $100,000 invested. The Tiger First Mortgage Program pays 7% per year, paid monthly, on secured, high-value, buildable properties in St. Petersburg, Florida. The investment is for 4 years, paying 7% per year or $7,000 per $100,000 invested. Your investment is secured by high-value real estate in St. Petersburg, Florida. Your investment can be anywhere from $100,000 to $500,000. Do you want to make $1,000 per year on $100,000 invested or $7,000 per year on a secured Tiger First mortgage? The Tiger First Mortgage Program may be just the program for you. The Tiger First Mortgage Program pays 7% per year, paid monthly. For more information, you can call 877-518-9190. That's 877-518-9190.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Hi folks, we're back and we have got a caller. We've got Mark in Fort Collins. Hi Mark, how are you?
Basil, how you doing?
I'm well, thank you.
Hey, real quick, I wanted to see if you'd look at Cassava Sciences for me. I recently bought it in the low 50s, around 51. I got out at 68. It looks like it's made a leg A up off the bottom after making a peak E down.
Yes.
And I'm looking for maybe a re-entry. Maybe it retests the 9-period, 14-period moving average around 58-ish. What do you think?
Right. So, okay, this is what I'm going to suggest. Because you just had a really nice trade in Sava, which is Cassava Sciences, trading at SAVA, 61.80 down 3.18. This is a big red candle, but the day is young in these biotech area. This is biotech deals. One of the things it does is it looks at Alzheimer's, is studying Alzheimer's, trying to produce some kind of a drug. I'm just going to suggest to you that you've had a good move. I don't know if you have to wait for time, you have to wait for price, or you just dive in and say, well, the stochastic's at 86%, the MACD is good, the 9-period is just over the last 2 days crossed positive. This is an entry point. But I'm going to say to you, because you've had a good move, you don't just have to dive right in, but in a stock that's moving quickly, you do. But this is a key day because, you know, my rule of 136. In this case, this is the second day of the consolidation after a very big move. This is actually the day that if it was above 70, that was the high of 670.28. If it was above that right now, I say that's fantastic. I would be getting in because this is a very quick move. So I'm just going to say hold it for a little bit, but watch that 58 level. It might not get there. I can look at it again tomorrow, but so far today, I think you're good at just resting. Take some time. Hope that helps you.
Yeah, thank you. Bye-bye.
Thank you very much. Folks, stay tuned for a great program and watch the market. If the Dow is up over 180 points after 2:30 this afternoon, that's a good sign. I'll be back tomorrow.